Good morning, guys. How are we doing? How are you guys doing this morning? Orinze David, I can see you. Good morning, everyone. We are starting off a bit late because we had some delays and I just got to the office, but we are starting right away. So, if you know anybody that should be here, that is yet to be here, send them the link. Let them know that we have started. Let me share the link with you guys so that if you know somebody that should be here that is not yet here, you can invite them so we can start off ASAP. So that's the link right there. You can just copy the link, send to the people that should be here with us. Let's go, let's go, let's go, let's go. Let's go, let's go, let's go. Welcome, guys. Welcome, guys. Good morning, everyone. Good morning, everyone. Good morning. So, I'm just trying to share the link with more people so that we can all get started together. This is the part two of what we started in like I think it was last 2 weeks. We're supposed to conclude this training last week, but we're not able to do that because I had to be somewhere else. So good to see everyone. Good to see. Please, your name. Let's know your name and where you're joining us from. Give us your name and where you are joining us from. Your name and where you are joining us from. Let's kick off immediately. Yeah, I see you guys. Greetings. Digital skills and empowerment. Good to see you. Amen. Anene Godwin from Anambra. Good to see you. Sandra from Abuja. Good to see you. John Mburu. Good afternoon. You're welcome. David from Abuja. Good to see you. John from Zamfara. Good to see you. Prince Mooney from Meduguri. Good to see you. John from Kenya. Good to see you. Victor from Anambra. Good to see you. Gilbert, good morning. So you guys are welcome. Let's go. So I'm trying to get more people to join the live. Just share the link on the relevant groups. Then we'll kick off. We'll kick off right now. So I hope you guys are ready. There's a lot coming your way today. A lot coming your way today. A lot coming your way today. We'll be concluding the series I started last 2 weeks. We're discussing how to create a trading plan, and I taught you guys a lot of things last 2 weeks, and I'll be continuing from there today. So if you were there on the first like part one of this series, let me know how to create the trading forex trading plan. If you were here in the first session, let me know. If you were there on the first the part one, let me be sure you guys have been following. If you were here on the first session, let me know. Who was there? Gilbert from Kenya, good to see you. Chubi came from Onitsha, good to see you. John from Afghanistan, wow, all the way from Afghanistan. My God, good to see you. Oko Emmanuel, Maoga, you're welcome. Sochi from Newi, good to see you. Dan Foster from Ghana, good to see every one of you. So if you were here last 2 weeks ago when we did the part one, let me know. If you were here last week when we did part one, let me know that you were here when we did the part one. So I'll be sure you guys are following. So I'll know where to start. Let me know where to start my recap from. Because if the majority of you were here last 2 weeks, sorry, you might not need to take so much time to do the recap. Okay. So who was here last week? Who was here last week? Benjamin from Abuja, you're welcome. Celestina from Delta State, welcome, welcome, welcome. Stanley Iribo, this name is always difficult for me to mention, but Stanley Iri something something from Nigeria. Good to see every one of you. Good to see you guys. Just 1 minute. You guys just give me 1 minute. Let me just send the link to the relevant groups so that we can dive straight into the training. What I have to teach you guys today is some high level stuff, some advanced stuff, some things that you don't hear from just any forex trading channel, some things that you might not have even heard before that are part of a trading plan. For some of you, to be new discoveries, and for some other people, it would be reminders. But either ways, I can assure you that today you are going to learn something that will be very, very helpful to you. Okay. So are you guys ready? If you're ready, drop fire on the chat. Let me know you guys are ready. We have 39 people now. If you are ready, type fire, put a fire emoji or drop something on the chat. Let me be sure you guys are ready so we can dive in like right now, I'll just do a quick recap, then we go in fully into the training. Okay, so let's go. So we have 40 people now, so we are good to go. Let's start off. Good. I can see a lot of fire emojis on the chat. Joaquin from Gombe, good to see you. Okorodudu Emmanuel, good to see you. Joaquin he just finished our training last week. He just went through the pre-recorded part of the trainings last week. So Joaquin, if you don't mind, you can just share your review of the training program with everybody on the chat. Let them know what our training program has actually been able to do for you. Okorododo from Wari, you are welcome. Okay, somebody said I watched the video after the live session. It was great. Yeah, good to see, good to know, good to know. John Benjamin. Okay, Stanley, this is your first time joining us live. Okay, amazing, good to see you. And I can see a lot of fire emojis. So last 2 weeks, we started a training on how to create a forex trading plan correctly. And I was able at the start of that training, the first thing I tried to do was to get you guys to understand the importance of a forex trading plan, because some of you don't even know that it's that important. That's why you are probably not taking it that serious. But the truth is, a forex trading plan is one of the most important things that you should have as a forex trader. Those are the key performance indicators that will determine how your trading is actually going, whether you're making money, whether you're making progress or not. So if you do not have a forex trading plan, you are doing it wrongly. Okay. Now I have to say two things before I start the recap. First of all, at every point you're watching this video, please make sure you're watching it live. Don't be watching replay on a live session. Okay. Anytime you're joining, make sure that the play button is at the end. Okay. Because some of you joined somewhere, maybe you just rewind the video and you're watching, you're lagging behind like 3 minutes back, lagging behind like 4 minutes back. Okay. Make sure at every time you're actually correctly listening to what I'm saying live. Okay, so that you don't have to, maybe if I ask a question, maybe you're seeing the question like 5 minutes later after I've moved on to something else. Okay, so make sure that as you're watching, you just make sure that you're watching it live. It's not backwards, it's not lagging like 2 minutes, 3 minutes backwards, and stuff like that. Okay. Then, secondly, also for those that will be watching this replay later, greetings to you guys. Good to know you guys. Follow these trainings. After we're done. So, Victor from Niger State, welcome. Ibadan. Okay, first time Silas joining us. You're welcome. You're welcome. You're welcome. From Bright Obiocha from Uyo, good to see you. Benjamin from Port Harcourt, good to see you. Okay, Joachim is saying the training was a blessing. He said first time I'm on Blue DJs. Yeah, that's how it should be. That's how it should be. So let's go ahead. Let me go ahead and give you guys a recap of what we discussed last 2 weeks, and then we'll dive right into what we have for today. So last 2 weeks, sorry, we started with discussing the mistakes that having a trading plan can actually help you to avoid. We talked about a lot of mistakes that traders make that having a trading plan can actually help you avoid very, very easy. Having a trading plan can help you avoid things like over trading, because most people think that if the forex market is open 24 hours, that means I should be trading 24 hours, and that's a mistake. You would over trade. Another mistake people make is over assumption. They assume that the forex market somehow, because it's working for other people, naturally should work for them. But the truth is, I told you guys last week that unfortunately the fact is the forex market is not really for everybody. It is not everybody that will do well in the forex market. It's a painful truth, but if nobody else tells you, me, I will tell you. It is not everybody that will do well in the forex market, just like every other industry. It's not everybody that is cut out to be a lawyer. It's not every lawyer, it's not every student that studied law that will become successful as a lawyer. It is not every student that studied medicine that will become successful, practicing medicine. It is not every engineer that studied engineering in school that will become successful, practicing engineering. So, forex is not really for everybody. You might just come in, find out that it's really not for you, and that's fine. Find out your own niche and put all your energy there. Okay. Number three thing I also mentioned was a mistake that traders make is they have over expectations. Just because it is possible to flip a $20 account to a $1,000 account doesn't mean that you should be doing it. Okay, that's not good practice. It's good, of course, to flip accounts, but nobody becomes a billionaire in trading by flipping accounts. You understand? People grow the account. You can have play account, which is what I advise you guys, like myself. I do have play accounts every now and then. You can fund $500, $200, whatever it is you want to fund, and then flip it. But if you're looking forward to grow an account, you don't grow accounts by flipping accounts. Okay, grow account by trading it, practicing real-time risk management, and making money from risk management and your trading strategy. Okay. And then I went ahead to talk about the number two thing, content in a trading plan, which is trading strategy. I told you guys that trading strategy is part of a trading plan. What is your trading strategy? Under a trading strategy, you have your entry rules. Entry rules. I told you guys how to determine what an entry rule is, and I went ahead to explain to you guys that trading strategy also includes a time where you are not trading. Not trading or avoiding the chart is also trading. Most of the time when people come, when people start learning to trade and all of that, they always feel like if I'm not opening, if I'm not buying, if I'm not selling, that means I'm not trading. But that's not the truth. Okay, you can decide not trading is as much as trading. Okay, if you come to the chart and you do not see a trading setup, go and sleep. You're also trading. When you're sleeping without trading because your analysis says there's no trading setup for you, you're also trading. So it's not until you take a trade means that you have traded. For instance, I don't know that I shared with you guys last week. Most times during the week, like on a full week, I don't take more cumulatively on every single, like, because I have multiple accounts. Cumulatively on every single account, I don't take more than maybe 4 trades, 5 trades in the whole week, like in an entire week. You understand? Because that's my style. I like to see my setup before I take a trade. So that the fact that today, like for instance, on Wednesday last week, Wednesday and I think Tuesday too. I think Wednesday only. I didn't take any trade on Wednesday. I opened the chart, looked around, there was nothing to see, and I left it. I didn't take throughout Wednesday, I didn't take any trade. Probably today, if I open the chart and I do not see a trading setup, I do something else with my time. You understand? I'm also trading. Not trading is trading. You understand? So you need to learn, you need to know this so that you don't overtrade, and you do not have an overly expectation about the forex market, what the forex market can actually do for you. Okay. Now, I went ahead to talk about exit rules. You should have exit rules. What informs your exit in the market? When is enough for you? Okay. Then we stopped at risk management. That was where we stopped under trading strategy. That is where we stopped. Um, we stopped at the risk management. So let me go ahead and type for those of you that missed last week. Let me go last 2 weeks. Sorry. Let me go ahead and share my screen so that we are together. I'll try and you know uh, uh, still list some of the things you guys missed last week. So tips to improve your trading. Oh, sorry. Tips to this was the topic I taught my students yesterday, so it's still on my mind. Tips on how to what is contained in a forex trading plan. Okay, so this was what we discussed last week. Number one, I talked about trading goals. Trading goals is where we discuss short-term goals, long-term goals. What are you trading for? What is your aim of trading? What do you want to achieve from trading? Is trading, do you want to trade? Are you trading because you don't want to work under somebody? Are you trading because you want to make money? Are you trading because of the freedom that comes with trading? Are you trading because it fits your time and your schedule, for living, family, and all of that? What is your goal for trading? It has to be part of your plan. You have long-term goals, like, are you trading? What do you want? Where do you want to? What do you want to achieve with your trading in the next 2 years, in the next 1 year? Okay, I shared my own trading goals. All my trading goals used to be from the first time I started, went to full-time trading from a one room self-contained. I had goals. I'll have to move to a flat, from a flat, move to my own house and all of that. So you should have your own goals, long-term and short-term goals. And we went ahead to talk about trading strategy, which is the second thing contained a a trading plan. So we talked about exit rules, talked about, let's start with entry rules. Entries, input entries, exits. Please, if you missed that last one, please go and watch it. I would really advise you watch the last training we did. That's the part one of this, because it's more detailed than what I'm actually typing. It's just I want to jump right into what we have today. That's why I'm actually trying to be fast. But we explained these things in detail last week, so don't miss out. So we stopped at risk management. That was where we stopped last week. So if you've learned anything about if you know anything, if you know what risk management is, define it on the chart for me. Let me see what you think. If you've heard about risk management, type on the chat. Let me know what you know. Let me hear what you know about risk management. Let me hear what you know about risk management. If you've learned, let me, somebody should type something on the chat. Okay, someone should type something on the chat. Let me know that you guys have been, if you've heard anything about risk management. Stanley says, my first time learning how to create a forex trading plan. Okay, good to see that. Good to know. Said, I've been following all this while, but I missed the trading plan lectures. Okay. All right, that's fine. That's fine. You can always catch up. It's always here on the channel. Um, so if you've heard anything about risk management before, let me know what you think a risk management is, before I go ahead and dive into it. Because my approach to risk management is a bit might be a bit different from what you've heard in the past. might be a bit different from what you've heard other people say about risk management. So if you've heard anything, what you think about risk management, type on the chat. Let me know what you think a risk management plan is. Okay, let me know what you think a risk management plan is. Anyone, let me know what you guys think. What do you think? Okay, somebody says that's my main problem. I want to know more about risk management and how to use it. That's good. Who else has something to say about risk management plan? Who else has something to say about risk management plan? Okay, somebody said risk management, a particular amount you are willing to risk across all your trades. Example, $5 across all trades. Okay, that's fair enough. That's fair enough. Thank you for contributing. I'm John Benjamin. Ayomide says risk management is the approach on how you manage your money in forex. Now, this is good. This is a very, very amazing, very nice decision. Thank you, Ayomide, for that. Somebody says, I think risk management is all about managing your capital and trade. Now, this is where I'll actually start. I'll actually start my explanation with Vincent's Vincent's definition, because this, unfortunately speaking, this definition that Vincent just gave us is the definition that most traders have about risk management, and it is wrong. Is very wrong. This is unfortunately, this is the totality of most traders, this definition of a risk management. The definition of risk management is all about managing your capital and your trade. But unfortunately, this is actually wrong. And I'll tell you why it's wrong shortly. Okay. Now, Victor Joseph says risk management is the process of identifying, assessing, and mitigating potential risk associated with trading. This is fine. This is a very good decision, too. Now, let me tell you what a risk management actually is. I'll define it. I'll do an extensive definition of risk management. So I want everybody to follow me. Please, whatever it is you're doing now, just give me your undivided attention, okay? Because I will explain this once and I want you to get it once. Risk management is simply this. Is a set of rules. You can decide to write it down if you want to. It's a set of, I'm just defining it based on, I will still type it down. Risk management is a set of rules and systems you use to, or you can say employed, to manage your trading decisions, your trading skills, your trading emotions, and your trading capital. Let me say that again. Risk management is a set of rules and systems. Rules, emphasis on systems. Rules and systems used to manage your trading capital, your emotions, your skills, and your decisions. When you're applying when somebody says, I am good in risk management, what they are saying two things. In quotes, they are saying two things. They are saying that I am good in managing my capital and I am good in managing my emotions. Because making money in the forex market, I've said this many times, I can't stop saying it. Making money in the forex market has to do 70% your trading psychology. And what is inside your trading psychology? Your mindset and your emotions. 20% risk management. What is inside risk management? Systems and rules. 10% strategy. What is inside strategy? Of course, when to buy, when to sell, and stuff like that. So when we're talking about having a good risk management, we're talking about being good in managing your capital and managing your emotions. Now, let me give you two ways or two approaches to give you a very clean risk management, approach. Now, risk management. Let me highlight risk management here. Please, you guys should follow me, like follow me carefully. This is a very, 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 very crucial moment. I mean, you guys should not miss what I'm going to be saying now. Now, there's something called there are two approaches to risk management. There is defensive, and what you call offensive. Or offensive, what I mean by offensive, like attacking. You guys watch football now. You know what I mean by offensive, okay? Or let me use attack. For people that don't watch football, they will think offense means annoying somebody. Defensive and attack. Now, as a trader, since from what I've already taught you guys right now, since you already know that 70% of your trading results is a function of your trading psychology, that means your emotions have one of the greatest influence on your trading. That is why people lose money in trading. People don't lose money in trading because they have a bad trading strategy. Some of you here, if we sit down together, and we really, really discuss, you show your strategy with us here, you actually find out that you have a good strategy. That's just the truth. Many of you here already have a good strategy. But the thing is, the trading psychology and the risk management backing up your strategy is very weak. Hence, even with a good strategy, you have a bad trading result. Sorry, they've taken the light. We'll switch over to the inverter like shortly. So the real truth is that many people don't understand the attacking and the defensive approach to risk management. It is very simple. Let me explain it. Let me start with defensive approach. Defensive approach is the approach you give to trading in trying to defend your trading capital and defend your trading emotions. Because at any point you overexpose your trading emotions in the market, it results in a loss. Things like fear of missing out, FOMO, things like greed, things like selfishness, things like over expectations from a singular trade. Those are the actual things that actually make people take high lot sizes. It is not, let me tell you the truth. What influences the reason why people, because everybody in trading, like every trader knows that you should not be risking all your money in one trade, but they still go ahead and do it. So the question is, why are they doing it? The real reason why they do that is because their emotions override their logical sense of thinking, because they are not not defending their emotions enough for it not to be the one determining their trading results. So it is actually beyond knowing when to use 0.1 lot size, 0.5 lot size, 0.01 lot size, and 5.0 or 10.0 lot size. You understand? It is, I've been trading for about 7 years now, and I don't know whether other traders like professional traders are telling you guys the truth, but me, I'll tell you the truth. Okay, the reason why people take high lot size is not because they don't know it's wrong, but simply because either they are just being plain greedy, or they're just being selfish, or they are just but at the tail end, at the background of the whole thing is just their emotions overriding their logical thinking. So they take those kind of very silly trades and they make losses. But the good news is this: when you have a defensive approach to trading, and you fully know how to defend your trading emotions from overriding your logical thinking, it is what informs your trading lot size, when to trade, the lot size you use for your trading, the number of trades you open, and stuff like that. You understand? Because if my defensive plan is very if my defensive plan for trading under my risk management is very clean, I can't be using let's say 5.0 lot size on $100 account, because my trading emotions will even allow it in the first place. My logical thinking would be so strong that it will override any unnecessary emotion that will want to lure me to take a high lot size on a small account. You guys understand what I'm trying to say now? So, as under risk management, you have what I call a defensive plan and offensive plan, which is your attacking plan. Your attacking plan, you're trying to make profit, because at the end of the day, we all want to make profit. We all want to make profit. But the desire to make profit should not at any time override your logical thinking. So if I have $1,000 and let's say I am down, there's a video I'll release sometime this week. You guys should not miss that video. The video is on, I don't have a title for it, but I just recorded it yesterday. We are yet to edit and stuff. It doesn't have a name yet, but just know that the next video I release sometime within this week on this channel, you guys should not miss it. I discussed and I shared in that video that most people don't know when to reduce their lot size. Just because you started an account with $1,000 does not mean that every single trade you're taking on that account would always be 0.1 lot size. When your account is down to, let's say, $800, it is time to change your lot size. When your account is up $200, let's say another $1,000, it is time to increase your lot size. So you need to know when. That's your attacking. That's part of your attacking plan under risk management. So risk management goes, everything I'm trying to explain, the entirety of what I'm trying to explain is the fact that risk management is beyond protecting your capital. It also includes protecting your emotions from overriding your thinking and your logical reasoning. Because that's why people blow accounts. Because once they are, don't worry, by the time I release that video, there's a lot to learn in that. You guys should not miss that video. Any next video you see me on this channel, see me release on this channel, just grab it with your two hands. There's a lot of value on that video. So the reason why people blow accounts is most times it's not just strategy. Your strategy is good, but risk management is terrible. Somebody said, strategy is not my problem. I'm seriously battling with psychology and emotions. Yeah, that's just the truth. Because this is the major reason why people are blowing account. Oh, it's not that if you sit down and analyze everybody's strategy, you find out that 90% of traders that are losing money actually have a good, clean strategy. Clean strategy. Somebody asking, what's your take on ICT? I'll explain that shortly. Let me just start this. I'll come back to this, your comment, Mr. Vincent. Okay. So people have a clean strategy, but the problem is risk management is terrible. Terrible risk management. Okay. So under risk management, as already mentioned, you have your defensive plan and attacking plan. You are not just protecting your capital, you are protecting your emotions, because at any point your emotions override your your trading decision, your logical reasoning about the market. That's when you make bad trades, and that's when you lose your money. Okay, I will not press on that. I will not press on that any further. So number 3, let's move on to number 3 thing contained in a forex trading plan, which is trading psychology. Okay, trading psychology, this is what is also contained in the trading plan. Trading psychology, I will not go in depth on this because I don't like talking about trading psychology, because that's the crux of trading. Trading success, I've already told you 70% is dependent on trading psychology, and I don't talk about it because it's exclusive for my students. I don't talk about it at all because it will be unfair to go in depth the way I go in depth on trading psychology with my students, because they paid for it. Okay, so I can't be sharing the same thing I teach them. Just on YouTube. So I will not be talking much about trading psychology. That's what I'm saying. But trading psychology is actually part of a trading plan. Trading psychology includes you have to know what are your most predominant emotions that influence your trading, and how do I manage them. Things like, I know I'm a greedy person. Like, this is an example. I'm not a greedy person, but these are things that I connect your trading plan. Like, you tell yourself, greed is part of the things that make me lose money in the market, and you now set a plan. How do I handle greed? You can set rules like, no matter my account size, I will not use more than zero point 0.1 lot size, something like that. It's that simple. I don't need to go much in depth into that. Somebody's asking, somebody said, what's the recommended lot size for $200 and $200 500 USD? It depends on your own, what you want to achieve. Is it a flip account or is it a growing account? If you want to grow the account, $100, don't risk more than 2% per trade, which is like $2. So I don't even advise people to start with $100. Like, if you want to go full time into trading, $100, you can't practice real time risk management, because if you have a $1 million account, you cannot be risking 3% or 5% per trade. That's a lot. So if you want to practice real time risk management on a small account, at least start with $300, so that you can do, even if you're risking 50 pips on a trade and you're using 0.01, that means if you risk $5, you're risking less than 3% or 2% of your account size, which is totally fine. So on $100, of course, you can't risk anything less than, let's say, 3%, which is like $3, $4, $5. $2 might not make sense to you as profit, but you can risk 0.01, 0.02 max. That's my personal advice. But do whatever works for you. Somebody said, is there any lot size calculator recommended? Yeah, sure. I recommend this guy's N4X. Okay, it's already here. N4X position size calculator. Just come on here. N4X position size calculator. Let me share. I don't think I can see my screen. Let me share my screen. I don't think you guys can see my screen good. Okay, so you guys should be able to see it now. So N4X position size calculator, that's what I use. That's what I use right here. As you can see, N4X position size calculator. So you can just put in the lot size, the currency pair, the account size, the percentage you want to risk. You can also swap with money if you want to use money to calculate. Then put in your stop loss, put in the pair you want to trade, then click on calculate. It will immediately just calculate the stop loss and calculate the amount of risk you're taking, the percentage you're risking, and the lot size recommended for you. Okay, so I use lot size calculator. Like, of course, I can't even do without lot size calculator. Like right now, because I have multiple accounts I trade, so I can't be calculating, okay, what's 10 pips for this one, what's the lot size. Straight up, position size calculator is always the face, the is first. As you can see, when I wanted to search it, that was like the first thing on my search. Once you put on search on, that's the first thing. That's like the very first thing. And position size calculator. So I use it a lot. So you guys should also use it. I would advise that. Somebody said you can use baby pips calculator. That's still fine. I've not used it before. And Forex has always been my go-to place. Now, number 4, I've mentioned trading psychology, which is number 3, content in the trading plan. Now, number 4, content. And I hope this defensive plan and taking plan helps you to determine what your risk, your lot size actually is. And just to drive it a little bit home, as a professional, you should not be risking more than 2% of your capital per time. The only thing is that you just need to work on having a big capital. And that is what I always advise people. The truth is, let me tell you true. Let me tell you, see, nobody tells you guys true, but me, I will say it. No Forex millionaire ever became millionaire with $100 account. Let me zoom in so you guys can see my face very well. I said, no Forex millionaire ever became a millionaire by trading $100 account. At some point in your trading, you would definitely need a bigger capital. At some point in your trading, you need a big capital. You need a big capital. So either you get, for me, in my own case, I was able to have investors that invest hundreds and thousands into my trading. That was how I started making like big money. You understand? For some of you, it might be prop firms. It was last year that I actually got interested in prop firms after a lot of my investors had, some of them traveled abroad, some of them had, plus a lot of things happened. So that was when I actually got interested in prop firms. But right from time, I've always been both lucky and, very blessed to have investors who were willing to give me thousands of dollars to trade for them. I mean, hundreds of thousands. So that was, I was very, very, very blessed to have that. So I didn't need prop firms up until last year when I started putting interest in prop firms. Until now, I'm still not big on prop firms and stuff like that. That's why I don't talk about it that much. So, but at some point, you need to scale up. So you can't, there's no time your $100, if you're waiting for $100 to become $1 million, it might take you years if you want to practice good risk management. So you need to learn how to practice risk management on a small account, then be open for investors. Investors that will invest on their own risk, not people that if you blow the account, they will start looking for you with DSS. People that are willing to invest at no risk on their own end. If anything happens to the account, the best you can tell them is sorry, we go again next time. You understand? So I was blessed to have those kind of people. So even the few times I lost their money, we are still friends till today. We are still happy because the agreement I signed with them most of the time is, if we lose this money, you can't take us to court. We can't be litigated. You can't sue us for anything. The risk is on you. If they don't want it, allow them to go with their money. Don't go and put yourself inside trouble. I'm advising you now as a 7 years experienced trader. Don't go and put yourself inside trouble. If the person wants to invest in your trading, let me give you 3 types of investors to avoid. Number one, the people that are looking for, people that are interested in what will happen if my account blow. Please leave them alone. Let them go with their money. You understand? Don't give any people that want you to give them 100% assurance that nothing is going to happen to their money as you're trading forex with it. Avoid those kind of investors. Please avoid them. They will put you in trouble. They will put you in hot pepper soup. I'm telling you, avoid those kind of people. Number 2 set of people to avoid is people that want a high percentage returns. Those people asking for 50%, 100% in 1 month. Please leave them alone with their money. Tell them, carry your money and go home. Thank you for coming, but I'm not interested. These guys will ruin you. I'm telling you from experience, so you guys should learn from my experience. Anybody asking for anything more than, in fact, don't even, I want to say 10%, anything more than 7 or 8% monthly, anybody demanding that from you, leave them alone with their money. This is what I do personally, and I've done it to tens or even not hundreds of investors. Anytime whenever they come, they say, how much can you do? Because I give them the bare minimum. I tell them 5% to 8%. That's all right. Although some manuals can say 5 to 12 or 5 to 10, but if it's me and you one-on-one, I tell you 5 to 8%. Anytime they say, it's too small, I'll tell them, well, that's fine. I know a bank that can give you like 2.5% in 1 year. So that's a good place to actually invest your money too. After all, an investment is investment you want. So invest it in bank. Go to bank and put your money there. They'll give you 2.5% in 1 year. But if you're interested, I can give you 5% in 1 month. So any investor that wants that much, avoid them. Avoid them like a plague. Number 3 kind of investor to avoid is every investor that is putting pressure on you. Any form of pressure of any sort at all, avoid, run away. Any form of pressure at all, because pressure is the greatest predisposition to losing money in forex. You see all these pressure that are telling you, have we not made money today? What is happening now? Have we not made money this week? Or at the end, I'll tell you, this week ended on loss. What is happening? At the end of the month, just calculate their money, give them back the money. Guys, I'm sharing something. See, this is I'm telling you. It will take some of you, it might take you 3, 4, 5 years, 6 years to actually come to this level of experience and speak the way I speak. For some of you, you're very enthusiastic. You still believe I can do 20%, 30% monthly every month. Relax, just keep trading. We'll meet somewhere in the future. So guys, avoid those three kinds of investors. Oh, somebody said it's fine to raise 5% of the account. So if that's fine for you, that's okay. 7%, much anything more than 3% should be ideal. Excellent. These are people that understand trading. Somebody said even 7% is kind of high to me. I'm glad some of you really understand how these things work. So at some point in your trading, you need capital. That's what I'm saying. Okay, I didn't become a millionaire trader by trading $100 to $1,000. I became a millionaire by trading $100 to 120, 130, $150. Then found somebody who was able to give me $100,000. Then with $100,000, we're able to make 2,000, 3,000, 4,000. I saw that people that were willing to give me hundreds of thousands were able to make 5,000, 6,000, 7,000. That's how I actually grew. I don't know for other people, though, but there was never a time where I was growing. Maybe $100 became 1,000, 1,000 became 2,000. It will take you years. It's possible. I'm not saying it's not possible. Don't doubt me. Don't say, but it will take you years, many years, many years. So someone gave me 50K and keeps disturbing me every week. My program with his money. I sent him his money ASAP after listening to your advice last month. That's excellent. Please give them back. Those people, and those are you see those people that give you small money, like all these $500, $200, $100. Those guys will weary you. They will weary you. I'm telling you the truth. Those are the people that will weary you. They will drive you into the ground. They will call police for you on top of 20,000 naira. I'm telling you. So avoid those kind of people. I've had, traders that understand how business works. That we had a loss of, like, let's say $20,000, $30,000 on the account, and you understand that it's part of business. They gave me time. They were like, okay, no problem. We understand that these things happen. Okay, when will you likely recover? I told them, okay, just give me 2, 3, 4 months. We'll recover back the money. And everything went well. We were happy at the end of the day. But so you see all those traders that will tell you, I have $100, I have $150. Please, no matter how broke you are, please don't take those. I'm begging you, because I know what I've seen. No matter how broke you are, avoid investors with small money. Those guys will worry you. Monthly is not good, rather 30 to 40%. Okay, it's all good. Somebody said, what about a recommended percentage for trading news? Don't trade more than 2%. Don't trade, no matter the trade, whether you're trading, don't trade more than 2% of your account size. If a news event comes out and you are risking, let's say, one to make 5, you risk 2% and make 10% in one single trade. Is that not enough? I don't know what else. Please let me go back to my teaching. You guys are really distracting me now. So number four thing, we need to round up now. I have like how many minutes to go? I have like 15 minutes to round up. So you guys should stop asking questions. Okay, I said, seriously, you saved me. Yeah, that's my business. I'm in the business of saving people from financial mess. So let's go. Trading routine. Trading routine is the fourth. Let me share my screen again. So trading routine is the fourth thing contained on a trading plan, trading routine. What is your trading routine? Your trading routine includes things like, when is my trading time? It is not every time that you should be trading. There's this guy I was following on YouTube. I used to follow on YouTube. I see his videos every now and then. He shared a video yesterday. He was saying that currently, right now, he's only trading the London session. That he doesn't trade the US session anymore. He's only trading London session. That's a trading routine. You know that your trading time is just between 8 a.m. That's 8 a.m. GMT plus 1 to, let's say, 4 p.m. in the evening GMT plus 1, and you're done for the day. Some traders don't know when to stop trading. I see people on their maybe on their status at midnight, they upload chat. Because forex traders like chat. I don't know the obsession with chat, and 90% of them are not really making any money. True. At 2 a.m. they will be uploading chats. Steady on the grind, steady on the grind, steady on the grind that you're blowing account. Steady on the grind that is blowing account. They don't know when to stop trading. They don't know when to stop trading. They don't know when to. They always every midnight, 2 a.m. They wake up. 3 a.m. midnight. They wake up. They are up trading, and the market is not even moving. Not like there's volatility. No volatility of any sort. You should have a trading time. What is your trading time? Your trading time can be only the US session. You make up your mind that only the US session is my trading time. So I start anytime from 1:30 p.m. That's my trading time. And you stick to it. But because unfortunately, a lot of people are on a lot of signal groups, a lot of signal channels. They are on this person's signal, they're on TradeWave signal channel, they are on another, maybe another, I don't know, FX something signals channel. They are on Michelle FX, they are on Blessing FX, they are on Odogu FX, they are on everybody's FX signal. So signals is always flying. So even if they wake up by 2 a.m. in the midnight and they see a trade, they still take the trade. There's no consistency. In fact, let me give you a very secret. When you're doing a back test, be careful not to back test a strategy at a time when you are not usually trading. If you're doing your back test, let's say your strategy works on the London session, only back test London session. That's the only way you can actually tell the real results of your trading, because not every trading strategy works on every trading session. There's some trading, like for instance, let me give you this one is should I share? Should I not share? No problem. Let me share with you. If you're trading Asian session, that is midnight session, that's not the time. It's paining me that I want to share this now, but no problem. You people are my guys. You people are my guys. If you're trading Asian session, Tokyo session or Sydney session, that's from 10 p.m. midnight to about 7 a.m., 8 a.m. in the morning, that's not time to be doing support and resistance. What you are looking for is breakout. What you're looking for in those kind of sessions is breakout, because those are the sessions where breakouts actually work the most. Go to your charts and check these things for yourself, okay? It's paining me that I share this one, but no problem. So anytime you see somebody putting support and resistance on Asian session midnight, or trying to do support and resistance midnight, so your results will tell you the truth. It's not, no need to complete the story. Somebody said Blowers Association of Nigeria. Most of them are using the mark and they'll just be making noise about. This is our industry. Somebody said chat give us peace. Okay, it's all right. Steady on the chat and still black. Huh? So guys, have a trading routine. That's what I'm saying. Have a trading routine. It's not every time that you should be trading. Have a time where you just focus on life and just do some other things with life. Anytime I come London session, most times, let me give you my own trading routine. Once I come out in the morning, my trading time starts from, if it's a day I need to make money, because there are some days that you're a bit relaxed, whether money is made or whether money is not made, you do all right. You understand that kind of thing? You understand? You just have some spare money. You have cash to spend. So whether trade or no trade, you do all right. But there are still some days where I am down, let's say 2, 3, 4, 5% down, draw down. I need to make money. And maybe month is coming to an end. I need to make money on this client account and get my commission at the end of the month. So I start my trading by 6 a.m. Those kind of days. But on a normal day where I'm much more relaxed, I start trading by 10 a.m. after a fully formed 4-hour candle is formed on a London session. Sometimes in 11 a.m. when the chart changes, because sometimes a fully formed candle forms at 10 a.m. Sometimes it forms at 11 a.m. So if it's during the seasons when it's forming at 10 a.m., which is like right now, I start trading on by 10 a.m. I come on the chart, check the chart. If I don't see any setup, I leave it till 12 p.m. I come again, I check, no setup. I come back by 2 p.m. New York session. If I see a trading setup, I take. But if I don't see at the beginning of New York session, that's all. If I don't see any trading at the first 2 hours of beginning of New York session, I'm not trading again for that day. So that's my own routine. That's my own routine. You should have your own routine. That way you can be able to evaluate what works. Because you're using the same strategy on Asian session, using a strategy that has, let's say, 70% win rate on London session and 40% win rate on Asian session. So you're trading the both sessions with the same strategy, and you're wondering why is it not working? What's happening? It shouldn't work, because both you can't even evaluate what the you can't even evaluate what the the result actually is. So have a trading routine, man. It will save you a lot of mess. Have a trading routine. Say thank you for that secret. I'm grateful for that extension. Okay, Thor. It's all right. Okay. Vincent said only trade London and New York session. Somebody said, I wonder what revelation people have when they discomfort themselves to trade the SR session. I wonder too. Like, I wonder. I really wonder. I feel you, bro. Great cancer. Okay, good to hear you guys. So the fifth and the last thing, that you need to have that is under a forex trading plan is number 5, which is the last. There are like 2 other things, but I'll just reserve those ones for my students. Is a trading journal. There are like 2 other. There are like 7 of them contained in a forex trading plan, but it will not be fair. You guys should understand these things now. It should not be fair to give you guys everything that people actually pay money to get. Okay, so but it's all good. A trading journal. A trading journal is the last thing that is very much part and parcel of a trading plan. A trading journal consists of your records of your trades. When you take a trade, let's say you take a trade on Euro USD. At the beginning part, especially if you're a beginner, currently right now, to be sincere with you guys, I don't keep a trading journal because to an extent, I've backtested my strategies enough to trust them such that I don't need a trading journal to help me to keep track. But at the beginning part of you, as a beginner, you need to keep a trading journal. What a trading journal contains is what informs your trading and your exit. For instance, if you enter a trade on Euro USD, you need to write something like, I entered the trade on Euro USD at this time, let's say 10 a.m. Then you have a space for reason. Reason I entered, I saw a double top after, let's say, a red candle or whatever it is was formed. I entered a sell. Stop loss, how many pips? TP, how many pips? What this helps you to do is that at the end of the month, it makes it easy for you to evaluate your trading result. You would see when you keep a trading journal, you will see that you might see that the trades that gave you most profit were likely taken on, let's say, the New York session. That will tell you that this strategy I'm using is working more on the New York session than it is actually working on the London session. The problem with traders is that they don't keep track of their trades. So they take 10 trades with 5 different strategies. And at the end of the month, they are telling themselves, I took 10 trades, and only 2 profits, 8 of them lost. But the truth is that it was not one strategy that you use. How do you evaluate it? Because at the end of the day, you need to know your win rate. You need to know your win rate, guys. You need to know your win rate. So how do you calculate it when you keep jumping from one strategy to another without keeping a journal? So keeping a journal will help you to keep track of your trading results and to evaluate your trading. I hope you guys are not taking this as I'm teaching for granted. I think that's all for trading plan. Now just take question. I saw a lot of questions when I was teaching. Only exotic person move in Asian session. Yeah, to an extent, yeah. But including NZD pairs. NZD pairs move a lot, and also JPY pairs, they move a lot in Asian session. That's when they usually break out. Especially if they range during the New York session, they usually break out during the Asian session. You just wake up in the morning and see that, what happened? So basically, how do you calculate lot size in US 30? I don't trade US 30. And to be sincere with you, I don't know how to calculate the lot size for US 30. I don't trade US 30. Okay. I don't trade, I just trade currency pairs. I don't trade US 30. But I know guys that trade US 30 and they're doing probably. Maybe Marcel one of these days will come around and teach you guys how to calculate lot size on US 30. Marcel is one of our senior traders here at Tradeway. So maybe on a day, or maybe AK, one of them can just teach you, because I don't trade US 30. Somebody said you are giving things we paid hundreds of dollars for free. You see the problem. That's my problem. Maybe some of us have time in the night to reach out. That's fine. You can just do the breakout thing like I explained on Asian. To be honest, I got a little profitable on Asian, especially their news release 2 a.m. and 5 a.m. That's exactly what I did. So you guys, I'm glad you guys actually experienced this for yourself. Says we are sorry, let the poor breathe. Yeah, so please apologies to our registered students. Sometimes you just need to give our stuff, because I know some people here, they actually sincerely want to get join our training program, but actually there's no money on ground. So I understand, so it's fine. You guys can enjoy what I'm teaching you guys for free at any time. You can actually still join our training. All the sessions, all the masterclass sessions, like yesterday we concluded a full series on trading psychology. We have part 1, part 2, part 3. That's how vast, and why we're not able to finish even in the part 3. You understand? So that's how vast trading psychology is. It's not a 30 minutes class. Each of those classes is like 1 hour, 30 minutes or more, only on trading psychology. So trading psychology is that important. You understand? So we have classes like that every 2 times a month. It used to be every Saturday, but because we want to give people more time to actually follow up, that's why we're actually doing it 2 times a month. We have follow-up class, we skip a week, and then the follow-up is the mentorship class, where I focus on a particular area of forex. I see my students that are not doing very well, and then I focus on it and brush them up on it again. So that's how we actually do the program. So all the trainings are recorded. So even if you join us later, you still have access to everything we have done in the past. So everything is recorded. It's part of what you get once you join the training. So so don't worry, even if you don't have money to join now, anytime you have money to join, you can always join us and enjoy everything you've missed out. So I mean, that's fine. Look at the exotic that tied with the Asian pairs. That's without USD, AUD, Japan, and so on. You get volatility on those pairs. Okay, good to hear. God bless you. Okay, talent, thank you for the blessings. Thank you so much, Victor. Silas, God bless you. More money, more profit, less profit. Yeah. Amen. Despite the 5 you gave nothing, may we still understand. Please give us details. No knowledge is lost. I don't even understand this particular. I don't understand what you're really saying, blueprint. So now this is a question that I want to answer now. Somebody said, please, what is your take on ICT? Okay, very simple. Very, very simple. One of the things I taught my students is that there are to different theories and approach to trading forex. Just like creation, there are a lot of theories of creation. There are some people that believe that the world was created by God in heaven. There's some that believe that the world started as a big bang. You guys have heard of Big Bang theory. There's some theories that have the evolution. There's something called evolution theory, when they believe that life began somewhere underwater, then from water to land, like that. So just the same way in forex, there are a lot of theories and approaches to trading forex. I teach my students like 5 of them, 5 approaches, but like I said, I can't give you guys everything. But one of the theories that people have or people hold in forex when they are trading in forex market is the theory that the market is a big move, a big manipulation scam, or a big attempted manipulation scam. most of the ICT principles are based on this theory. And it is not, I'm not saying it is wrong. Neither am I saying that I fully agree with what he teaches. But what I can assure you is this: if you look through all the theories that people use to trade Forex, there is always an element of truth in it. Some people believe that there are algorithms, which is mostly what ICT actually teaches. I love the guy. I watch the training, so don't. I'm not trying to judge him of any sort. I love what he's doing. He's doing amazingly good. And but most of the training are based on the theory that there's some form of algorithms, some bots, some kind of attempted manipulation going on behind the scenes that is actually the main reason why the market moves the way it actually moves. And if you look closely at the charts and analyze the things he said, you'll see that there's some element of truth in it. But just because this theory holds true does not mean that the other theories are now false. Because at the end of the day, what we want to make is money. So my take on ICT, which is the guy that started propagating the SMC theory, he claims that he's the one that started the theory, of liquidity grab, break of structure. Have you guys have seen those things? BOS, churching, those kind of things, character changing, blah 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 blah. So he says he's the one that started it. But I've been trading the market long enough to know that I've always known liquidity grab, like from the first 2 years of my trading. I already know what a liquidity grab is, which he, as at that time, had not even gone public with those kind of teachings and propagations and theories, stuff like that. Okay, but like I said, he's a great guy. I love his teaching. I love what he's doing. I watch, I learn from him. But these are all people's theories about trading. But that does not mean that his own theory is supreme and now invalidates other theories. Like the theory of support and resistance is a very strong theory. It's like the oldest of theories in the market. Support and resistance theory. The theory that the market tends to react a certain way when it gets to a certain point, and that you can as much as bank that this is what will happen, or that there will be a reaction when the market gets to this particular level. These are all theories. Okay, these are all theories. So ICT's approach to trading is simply a theory which works when you actually look out for it. Because of course you guys have seen liquidity grabs happen. You've seen what's it called, fair value gaps happen in the market, and you actually see the market like go to that point, grab the liquidity available in the fair value gap, then start moving back in the initial direction, stuff like that. It happens like real time on the chart. Okay, and you guys, if you watch my weekly analysis, you see that I combine a lot of theories. I'm not the person that comes in one. I want to make money. I told you guys last week that my goal in forex is to make money. Whatever is making me money, that's what I'm doing. I'm not interested in that these people, because this is a very foolish thing that a lot of newbie traders do. They will now go and select one camp, tell you, me, it's only SMC that I'm trading. I am SMC trader. I am not an SMC trader, but I trade SMC. If I see an SMC setup that lines up with my trading setup and my analysis, I take it with my full chest. You understand? So I'm not a retail trader. Let me tell you, we are retail traders. We only trade. We follow the big boys. If I want to go anywhere and the big boys are not going there, but my setup is saying that this is where the market is going, to hell with the big boys. I go with where my setup is saying. Some people will say we are institutional traders. We trade like banks. We're trading like banks. If you like, let all the banks be trading something else. Once my setup says this is where to go, and both JP Morgan, Swiss Bank, what's the name of? I've even forgotten the main ones. Anywhere they want to go, let them go. My setup says this is where I should go. This is where I'm going. You understand? So that's me. I combine theories. I'm more like a discretionary trader. Okay, I do my own thing. I need to see my own setup. Once it lines up with my setup, is following the trend. Because at the end of the day, I want to follow the trend. I'm a trend follower. I don't go against trend. I don't trade breakouts. I don't trade what's it called? I don't trade reversals. I trade reversals when I'm trying to martingale it. Okay, you guys should know what is martingale. If you don't know what is martingale, is an indication you need to join the mentorship program. So that's it. That's it. So I hope you guys got value. God bless you, sir. Don't be tired of giving us free value. No, I can't get tired, man. I don't even need encouragement for that, but of course, you guys can always encourage me. But I don't need. I love teaching. You guys should know by now. I love teaching. Like I love talking. You guys should know this by now. So it's not. I don't need an encouragement for it. But of course, you guys should always thank me. We will definitely join, even if we have blown through your trading till like come your way again. Okay, are we back? Are we back? I think we're back, right? We're back. So I love you guys. If next time, I hope Mr. Vincent, I was able to answer your question. That said, if you got value from the things we shared this afternoon, let me know that you guys got value from what I shared today. And let's call it a day. So next week, let me find the topic for next week. Let me tell you guys what we'll be discussing next week. Are you guys still with me? If you're with me, type something on the chat. Type something on the chat. Let me know you guys are with me. Let me know you guys are with me. Can you guys still hear me? Can you guys still see me? Um, let me tell you guys the topic for next week, so that if you need to prepare yourself for next week, so that you prepare yourself. Okay. So I'm looking for the flyer right now. So the our next mention is on Monday, the 3rd of July 2023, and we'll be discussing how to identify a market reversal and retracement in forex trading. This is the flyer. I'll still share the flyer with you guys anyway, but this is what the flyer looks like. So I'll share it with you guys sometime, this week. So we're talking about how to identify market reversal and retracement in forex trading. Well, you guys don't know I have plans. We have plans for you guys. We want you guys to make money. You understand? So we have like a rule of program already scheduled. So we are not pre-thinking anything. We'll just be running it like that. So I'm glad you guys got value. I can see value, value. Thank you, thank you, thank you. Yes, yes, value, 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 value. So I love you guys. Keep trading till I come your way again. FX Daddy, and this is our Telegram channel. Let me type a Telegram channel. For those of you that are not on the Telegram channel, let me give you guys a Telegram channel. So click the link, join the Telegram channel. Let's make money together. Okay, so that's the Telegram channel right there on the chat. So goodbye everyone. Goodbye everyone. See you guys some other time. Cheers.